welcome on board Dhananjay Sinha, co-head of Equities at Systematix Group. Dhananjay, thanks for taking the time out and joining us. Give us a sense of the moves that we're seeing when it comes to the entire consumption pack. FMCG has been in a bit of a jiffy over the last couple of trading sessions. It's been doing well one day, then it's been deep under pressure the other day. And you also have Avenue Supermarts that's been ailing away today. And especially after the commentary that came in from GCPL in the middle of the quarter three. So tell us, what's your outlook going ahead in the entire consumption space? Do you believe this is a temporary blip that's being seen by the sector and better days are yet to come, or is that going to take some time?
So I think the consumption space has been reeling under multiple headwinds, largely in the context that companies such as Nestle and other even auto majors have been saying that there is a constraint as far as the income growth is concerned. So there's been a lot of talk about shrinking middle income consumers, especially the urban side. So I think that that news has been there, and I think with the results that we saw in the last quarter, I think all those things were there, reflected in the volume growth and commentaries of various companies. I would say last quarter, people also expected, or companies such as Dabur and all had actually said that there would be better rural growth and all first quarter or second quarter. People were expecting. I think there was a disappointment there. I think what people are looking at, after a very sharp correction that's been there, people are expecting a better second half, largely coming from the fact that there is a sort of optimistic view about farm sector performance and production of various crops in kharif crop and sowing season for rabi crop. So I think there is a sort of a positivity with respect to that. Also, that we have seen that there is some amount of positive wage growth, real wage growth that we have sort of estimated. It's very modest, but I would say it has turned a little positive at, let's say, about 1.5 to 2% in real terms. So it was languishing in the negative territory for a long time, or it was absolutely flat for the previous 10 odd months. So there is some amount of attraction that is there with what, and then people are sort of looking at this sector, this segment after the sharp correction. So I think management commentary is something which is very critical, and hence I think when GCPL made that statement about sort of margin pressure and all, is something that stock was actually saw a significant correction of almost like 9 to 10%. So I think, and with that, I think a lot of other companies in the consumer space also saw the beating. I would say that from there on, people are kind of trying to look at value there. Looking forward, I would say that there will be all these things that I've just said about the agriculture sector performance, and I think if you look at other government initiatives, there does seem to be some amount of spending that is now happening in the rural space with all the dole-outs that are happening from state at the state level, and also that the credit policy, the last one, talked about increasing the limit for uncollateralized lending to the agriculture sector to 2 lakh crores, to yeah 2 lakh rupees, sorry, 2 lakh rupees. So there does seem to be certain amount of policy focus out there. So from the tough situation that consumer companies have actually seen, there can be some revival as we can look at going forward. And I think the other thing to really look at is the two-wheeler volume growth, which has been positive. If you compare it against the passenger vehicles or commercial vehicle, growing at something like 14-15%, and tractor volume growth also seem to be somewhat positive. So I think there does seem to be some activities, especially arising from government initiative and also the agri sector performance. But I think this is going to be a very shallow recovery because the urban sector is actually slowing, and there is a certain amount of repatriation of money that happens from urban to rural. That might actually be the weakening factor for the consumption space in general in the urban areas. And to some extent, there will be a spillover on the rural as well. So I think that's the broad takeaway we have. It's kind of, to summarize, somewhat positive at the margin for the rural place.
Complicated though to kind of figure out which way it's gonna go. Maybe it's just better to stay out for the interim and then take a fresh look at the segment and the sector. But in the meantime, Kunal, talk to us about some of these heavyweights, SBI and Reliance. They're giving up today. What's the sense on the charts?
Nothing major, in terms of damage to these large cap names. I think it's more of a roller coaster ride, which we're seeing for many of these stocks. One day up, one day down. I think yesterday we had the PSU Banking Index, which was one of the better performing indices, and today it's the time where many of these other sectors like railways and then you have metal stocks, etc., which are doing pretty well for themselves. So I think it's more of a one day up, one day down for many of these stocks, even from the large cap names. Now, the concern out of the two names which you mentioned is on Reliance Industries, because even after this 70, 80 point bounce, which we've seen from 1230 levels towards 1300, 1320 mark for Reliance Industries, it's not been a very strong or a volume backed move for the stock, and I think that's the concern, because typically when the markets are getting into a phase of revival, you would want the best of the large cap names, and especially the heavy weighted large cap stocks. They tend to participate in a much more stronger correlated manner. But if we don't see that happening, which means that the stock is due for a further leg of consolidation or correction. So my sense is that Reliance Industries could probably consolidate from here on, and if the stock comes back to 1300, 1320 mark, that could actually be a time to lighten out some trading positions.
Kunal, you're spotting some trouble ahead on the charts for Reliance. Nuresh, coming to you now. Since we're talking about nifty heavyweights, let's also talk about Bajaj Finance on the charts, because fundamentally lots has been happening with this stock over the last couple of days. What is the chart for this stock looking like going ahead, and do you believe that this slight bit of positivity that the stock has been seeing now is going to sustain going ahead as well?
So we've seen the uptake today post the analyst meet and various updates from different brokers. But if we look at the chart for the last almost 3 years, it has continued to see multiple times 8,000, 8,200, 7,800. That point of resistance become a problem zone multiple times. It's almost like what has happened with HDFC Bank for almost 3 years. Same is the case with Bajaj Finance. As of now, we're at the lower end and now coming back to the midpoint. So there is a lot more time we need to knock out those resistances and then maybe look at it. So for now, I would expect it to be range bound. Closer to 7,500, 7,800 could be a target for the current move. And post that again, the stock consolidate.
Taken. So a bit of a up move is pending, and then perhaps it consolidates. Wanted to get a better sense from you, Dhananjay, as far as the infrastructure sector is concerned. It went out of flavor in between, while industrials, the likes of Siemens, ABB, L&T were doing well. Pure play EPC, road companies, the IRBs, the PNC, and Ashoka Bilkor of the world fell out of favor. With the budget impending, do you anticipate a bit of a revival in some of these names?
Think this is a hope trade, especially there has been commentary from the government and government sources in the media that there can be a sort of a revival in government capex, wherein we have seen in the first half of this year, both for the central government, in fact, more than I think the data till October is telling us that there has been a contraction in capital outlay by the state government and central government if you put together. I think that you know people are talking up the revival, especially in the context that the second quarter GDP numbers were bad, and people people cited cutback in government spending for the slowdown, and the expectation that has been built is that the government would come back and start spending and the revival in capex would happen. Our view is that it's going to be an underperformance in a significant way in the full. If you look at the full year estimate, if you consider the overall budget capital spending of about 11 lakh something, that they have actually budgeted, there can be a considerable underperformance there. And going forward, also, I would say that governments will start to look more for revenue expenditure, more spending on the social themes and rural themes rather than on capex. And then we are seeing a certain deceleration in the tax revenue coming from income tax, and corporate tax has been contracting, and deceleration is there for indirect tax as well. So I think the fiscal scenario is going to be fairly challenging, and as a result of that, the trade-off between looking at livelihood issues of people and addressing the income situation versus the capex that the government had been doing, I think that is going to be fairly stark. And I think the trade-off would imply that there will be lesser spending on infrastructure by government. So I think I would be wary about getting into such names or such themes from a medium to long, let's say 2 3 years perspective. So I would, my preference is definitely, towards consumption themes and rural themes rather than, the infrastructure heavy sectors, including construction and related manufacturing sector.
Okay, so that's Dhananjay's take coming in on the entire infra basket of stocks, sounding slightly cautious going ahead. But on that note, we'll slip into a very short break on closing trades and keep it going with the market discussion just on the other side of this break. You stay tuned, we'll be right back.
Welcome back. Well, let's take a look at the Nifty, whether there is any bit of action, because it's been fairly quiet throughout the trading session and it continues to be range bound. Not much of an action. 24,630 at the index level. Bajaj Finance has been doing well. There's a bit of a traction on Britannia today. So clearly, distinction being made within the FMCG pack. Shriram Finance, BPCL, these are some of the other names. While on the losing side, Adani Ports, JSW Steel, HCL Tech and SBI. These are some of the names which are in the red at the moment. But cement as a space has been fairly active in the last couple of weeks, because there have been those notes and channel checks doing round that there has been apparently 10 to 30 rupees kind of price hikes that the cement companies have managed to take in the month of December so far. But of course, the big question is on sustainability of those gains. This is something that CLSA also pointed out, and we'll get Ashesha to join us shortly to talk to us about what exactly are the questions that CLSA is talking about, and what do they make of the entire sector analysis. In fact, she's right there with us. Ashesha, tell us about the cement pack and what CLSA has to say on the same.
Well, absolutely. A whole host of cement stocks are in focus today on the back of the CLSA report which has come in. CLSA highlights that the cement prices have risen by about 10 to 30 rupees per bag in the month of December so far, which is a significant improvement versus what we had seen in the last few months. Remember, price growth has been muted for the last 1 or 2 years, and cement prices have attempted several price hikes, but they were not sustainable and had to be rolled back. So any increase in prices is considered as a big positive for the cement sector. CLSA also says that volume growth, although it was muted in the second quarter on account of monsoon, on account of lower capex by the government, but it has seen significant improvement in the second half of November this year, and it is expected to continue going forward. They are very positive when it comes to volume growth outlook. They believe volume growth is expected to improve in the second half of FY25 and will continue in FY26 as well. They remain selective within the sector. They prefer Ultratech cement, but all in all, their view continues to remain very positive. They say consensus estimates imply 4% increase in cement prices in the second half of the year, and they are assuming sharp recovery as far as volumes are concerned. And remember, most of these cement companies have been focusing on optimizing their cost, so that will be an added advantage. But yes, cement prices have risen, which is a big positive. CLSA has come out with a report, and hence all of these stocks are buzzing in trade today. Okay, Shesha, thanks for taking us through that. So CLSA's note on the cement space looking rather upbeat, and they're particularly positive on Ultratech when it comes to this space. Dhananjay, I wanted to get your view in quickly. What's your view on the entire cement space right now? Do you believe that the space has some more upside to it going ahead, and CLSA is preferring Ultratech? How would you play this space?
So I think there can be selective opportunities for sure. I think it depends on the market power that each of these companies face in the regions. But I think in terms of the macro picture, I'm not very positive about it. The kind of volume growth that we've seen in the cement space over the last, let's say, 5 6 years has been in the region of 8% on average, because the government had been spending a lot on construction, especially the highways and all. The last budget was about 2,75,000 for highways, including other spending on repair works and modernization, etc. Little over 3.5 lakhs. So I think there has been a stagnancy out there. We think that the volume growth can actually come down. The new normal that we see is about 4 odd percent. From time to time, companies have actually taken price hikes. I think we have seen this over the last couple of years. I mean, last year also, companies had taken significant price hike around the winter time, roughly about 12 months back. But they had to really wind that back because of the lack of orders and the inability to sustain sustain the rise. So essentially, companies try to do a price hike after the monsoon season, hoping that it sustains and it sticks. If it doesn't, they actually wind it down. So I would say that such kind of sentiments do occur sporadically. But I think structurally, I would say that we think that the ability of the government to actually do more capex on roads, etc., will be far more limited, especially in the context that we find that the commercial vehicle volume has actually been shrinking. And over the last 12 years, I would say that commercial vehicle MHCV volumes have roughly been stagnant, growing at less than 0.5%. So I would say the utilization of such spending and the revenue that you get through tolls, etc., is going to be a question, especially for HAM projects. The burden is going to come, shortfall in revenues would come on the state government. So I think there will be a sort of a much lesser imperative for the government, both for the state government and the central government, to actually go ahead with aggressive spending on infrastructure and particularly roads.
Okay, Dhananjay, we'll have to let you go on that note because we're gearing up to hear the new RBI governor who has a press conference lined up at 3 p.m. So we are watching out for that.
If you like this video, then like, share and subscribe to ET Now.